trades. This is what we've had so far today on the S&P, NASDAQ. You can see we obviously coming into the cash open. We can see we got a stack of 1s and 2s up into the prior swing high here. So there's your liquidity pool that we always ask you to mark off on your charts. So there's your liquidity pool price there. And that's where the 1 and 2 traders are going to be positioned. And they got a nice little sell into that trade. Got a nice result from it. A good solid profit. That doesn't look like much. But the high price there of around about 40 traded a low price there of about 20. That's a 20-point move. A 20-point move. That's pretty good. So if we get a 20-point move, it's a $400 profit. Now we've got the max trades into the top edge here with the 2 sigmas. Now look at the 2 sigmas. What direction do you think we should be trying to go in from these 2 sigmas? It's incredible, isn't it? We covered it in classroom yesterday. All the 2 sigmas are running above us. So the idea is to trade into the 2 sigmas, isn't it? So when we get those big liquidity pools into these bottom edge prices, we're probably not lost for these narratives, are we? Well, we're not lost for these narratives because we've got the opportunity to spot this on our own charts. So when we've got the possibility that it's all buy side into these 2 sigmas, and if you look backwards, the 2 sigma started over here, started here. It started at 7:47 this morning. Look below us. Yes, there's been 1 sell trade here, which is why we've got these 2 red lines here. And then it turned back into a buy when we started to see these successful buy-side auctions. So when we've seen these successful buy-side auctions and the 2 sigmas above us, my goodness, it's time to rock and roll. Now, let's take a look at this as a storyline. Now, it doesn't mean we want to buy this. We don't have to buy it just because this is what we're seeing. Let's take a look at the value narrative that we look at. Let's take a look at what the volatility guys make of today's business. What do you think? Well, we can see that the volatility guys at the cash open were very, very bullish on the pullback here. And then they quite clearly reversed out hard into this max sell signal here. That's a great looking trade. That is a fantastic looking max 2 sigma sell signal because we've talked about the 2 sigma being very similar to an RGL. It's sell side below, buy side above, yeah? So when the price comes back out the 2 sigma level there at 650, we're looking at a short sell opportunity. Now, when we come out of the 650 level there, you can see obviously we start to complete an auction here, and then we complete an auction here, and that takes us all the way down to this liquidity pool at the very bottom edge, 650 to 600. 1 second. That's good news. We've been able to get a trade from 50 to 0 for $1,000. Now, anytime we can make $1,000 on a cash open, we should be very, very happy with ourselves. But there we go. Max signals, 2 sigma, and an agreeing value line. And an agreeing value line. And $1,000 paid out. When we trade into this, the challenge we've got, of course, is we don't have any liquidity to the left-hand side, do we? When we start making higher highs on any sequence, and we can see that this was, of course, a completed buy-side auction, it's very difficult to be selling a max trigger on a way up without any evidence of sellers at lower prices. So this is a tough ask here. This is a tough gig to get involved in at this stage. We can see, even if we look at the underlying narrative, we never really seen any selling volumes coming in until this phase here, which led us to this number 2 and number 1 market seller coming in here for that short sell. Implied correlation buyers came in at this stage. And obviously we started to see a lot of bids coming in as well. So we had bids from the market makers and implied correlation buyers into these liquidity pools, and they did a good job of turning the price round just in time for the short-term value to go bid. So with the short-term value going bid, of course, it means that we're starting to pull our max trade offer into higher prices. And that's always something we can pay attention to. Now, obviously, again, we don't have to agree with the sell, because when we get into that liquidity pool, into this top edge liquidity pool here, we can see that the short-term value is punching back into that area. So we've got to be really careful with that trade. Now we can see that on that exact candle, we can see that at 1547, we get another max strong offer. There it is there on your trade log. Max strong offer at liquidity pools. But when we're in an upset, we see that idea. It's very difficult to get a liquidity pool because we haven't got any into these areas. So where's your liquidity pool here? Well, your liquidity pool doesn't exist. I mean, we'd have to take it all the way up into that top line. So we've got to be really careful with these types of trades. You know, we've got to be careful. Every max trade is at a slightly higher price, which means it's a fading opportunity. Still works. Every max trade stops the price and reverses it, stops the price and reverses it, stops the price and reverses it. But we want to tie it in with other things coming in. We want to try it in with the balanced portfolio hedgers coming in, for example. Well, the balanced portfolio hedgers came in at this candle here. So we started to see those guys coming in and saying, you know what, as a balanced portfolio hedger coming in, we're now looking at rotating off the major highs. Now, that wasn't the major high. The major high was up here. So we get the idea that at least we're starting to get some support for that short sell coming onto the books. And obviously the short sell is now working in line with that underlying macro. It's just a little bit light for the 2 sigmas. Now, when does the 2 sigma change? Well, the 2 sigma one would imagine if this balance stays in place for long enough, we would imagine that this market will go bearish on the completion of an auction at this price here, wouldn't it? Following yesterday's classroom, I'm sure you're already paying attention to that at this stage. So it's turned out to be a pretty good trade, hasn't it? It's turned out to be a pretty good day, all things considered. This was pretty much your main trade of the day. It was worth $1,000, so that was brilliant. These trades look a little bit challenging because we're into this new phase of liquidity. If I said to you, where is liquidity? You look to the left, you say, I have no idea. It's really at the top edge here. It's really at the top edge here where we can see that liquidity. So we know this is going to be a tough ask here. You can see that this is a traditional short sell accumulation against that value, isn't it? Just looks like a traditional accumulation. So if we know that that's the case, and I now go into this chart and I can say, well, that's realistic then, that this is probably the cap buy price. Yeah. That's not the commercial buy zone. It's the cap buyer, right? So we've got the cap buyers coming in here and driving the bid into the top line, trying to get buyers to pay over the odds. We've lost the short-term value, but we've still got the macro value. So we need that higher print to get that short sell working for us, don't we? And it's worked for us. I mean, every sell we've had has worked for us. That's good news. And that's been the S&P NASDAQ equities since the cash open using the trade log. How did those live bids on the bond do, by the way, guys, using the trade log? Did they work out for you or not? Turned out pretty good, didn't they? Oh yeah, even the bonds turned out pretty good. So those little live bids that we showed you appearing on the trade log at that stage made a good wad of cash as well. So even those ideas, crystal clear information on your charts. There hasn't been any other bond trade narrative on the trade log since those bids came in. And obviously, again, people just can't believe that these are real. That's okay because we can prove it, can't we? So here's the trade. Here's the last couple of trades. There's the ideas coming in there. There's traders that are expecting rates to start falling. There's going to be a strong drive lower to bid into. Start looking for that drive. Start looking for that bid at 1530. Now, that wasn't the first one. You know, we can obviously understand that there are other ones right through this bottom edge phase. You know, there's a lot of other ones. But if we look at that last one at 1530, This was this one in here. There's the 1529 right there. There's your bids coming in, and that's what happened. That's what happened. That's bloody good. If you don't think it's very good, that's up to you. But you can see that that was superb. And if you want to know about the other ones, there they are there. The STRS traders expect rates to fall. Strong drive lower. Look to bid the drop. 1515. 1515. This is this one here. 1515. There it is. Look at it. Look at it. It's unbelievable how accurate that opportunity was to buy into. Unbelievable. And obviously it takes account of the fact that we've got the drop that the narrative suggests we should be looking for to be that little bit safer on our trades. And we needed that because we needed to get a little bit of space between ourselves and that price. And obviously the takeaway in the 10s has been incredible during that period. Absolutely spot on. Perfect. If you don't think that's perfect, I don't know what I'm going to be able to show you that's going to be any better than today's bond trades, guys. That is unbelievably accurate. Beautiful, isn't it? Absolutely beautiful.